And my first guest in studio this week is Mr. Roger Schlesinger. We like to call him the Mortgage Minute Guy. I think his friends call him that too. Roger, good to see you. First time we've had you in the program this year.
Yeah, Happy New Year, Don.
Exactly. Now, I really wanted you on the program this week because as I was driving, and I should say as I was floating into the studio here, we're getting a lot of rain in Southern California, heard a bunch of radio ads in the car about refinancing mortgages, getting new mortgages. They're telling us it's really easy to do. But yet, when I pick up the Wall Street Journal, they're saying that it's going to become much more difficult to get a mortgage. They're tightening credit restrictions and that type of thing. So I come to you and say, Roger, what's the truth?
Well, the truth is it's getting more difficult.
Okay.
It is definitely getting more difficult. It started last year with Andrew Cuomo's idea of HVCC, which is the Home Value Code of Conduct, or how you'd get an appraisal. And what happens is that we have to call a management company. They, in turn, call an appraiser, generally not from the area that you live in. And that appraiser does not get to know anything about the loan other than whether it's a refinance or a purchase. Doesn't know what value we're looking for or anything else. It comes out to your house, and obviously because he's been criticized so severely, because the appraisers were one of the big problems according to the powers that be, he will come in with the lowest possible value. And most likely it will not work, and you have just thrown out $300 or $400 or $500 because you won't get your loan because it's too low.
So we're before the system was kind of, I don't want to say corrupt, but the system was broken. You know, you were getting basically whatever appraisal you needed to meet the loan. Now it's just exactly 180 degrees from that?
Well, I take exception to what you just said. The system could be corrupted, but there were many safeguards as to what they could do to stop the corruption. Yes, you could call up an appraiser, and what we did is we'd call up an appraiser and say, look, we need to see a value of $400,000. Is it there? And they'd say, well, you know, I see $375. I might be able to push it to $4. But if it was a $200,000 house and you said, is it $4? No, it wasn't there. Then once the loan came in, every mortgage company and then every investor had a right to order a new appraisal, to order a review appraisal, to run comps, whatever they wanted to do to make sure that this was a fair appraisal. And they did. They threw a lot of appraisals out in my companies that I work with. But not everybody. So it wasn't just, hey, fix it any way you can, let's go. There were actual rules, and they did follow them. But they never mentioned that every mortgage company, every lender, every bank, every investor had the right to review every appraisal. They don't mention that when they tell you how bad it was.
Well, when people talk to me and they ask me, you know, what do I think was the cause of the real estate problem, the debacle that really was the genesis of this financial mess that we got ourselves into. And I tell them, look, it was rampant greed from the very top all the way down to the bottom. The Wall Street people were pushing the money on to the mortgage companies. The mortgage companies were trying to find borrowers to borrow this money. And there were people who were flat out lying about how much money they made because everybody thought they were going to become a real estate speculator, flip this house on TV, and become rich.
Right.
And at some point in time, the bubble burst, and the whole thing just fell apart like dominoes.
Yeah, I think there was other things that helped that. The credit deferred swaps, the no uptick rule in short selling. Those things added to it. But you're right. But you know, it really started with the client who came in and decided he was going to lie. And that was, you know, we've never allowed that. I'm not saying we didn't have people, but we've really never allowed somebody to come in and say, you know, wink, wink, I'm okay, and let's do it. We never did, in my jurisdiction, we never did what was known as a liar's loan, which was a stated wage earner. I said, no, we're not going to do these loans because it doesn't make any sense. What are they stating? We can get their check stub and see what they make, so right. What are they stating? We did a lot of stated loans, but not stated wage earners.
Well, it's one thing if you're self-employed, and then you're trapped into basically a stated income loan, for lack of a better term. But if you're a W-2 wage earner, as you say, you've got pay stubs that show exactly how you make, but yet you add 50% to that. That's exactly what was going on in some places.
Right. But I'll tell you something. You can't get a self-employed person a loan these days, regardless of how strong they are, and that is really against my better judgment. I'm very upset over it because the one thing that self-employed people have that wage earners don't have is they know how to survive. Right. Because they have to survive week after week after week. There's nobody giving them any money. So if they get a loan, they're not going to take a loan that they can't survive in. They're going to take a loan that they feel that they can handle. And the biggest thing that I think cuts the difference between making it and not making it is reserves. And the only thing that we don't ask for anymore is reserves. If you got 2 months of PITI, the principal, interest, taxes, and insurance, that's good enough. We'll go with it. But what happens when you lose your job?
Well, now, Roger, for people who are still wanting to refinance, people who are looking at purchasing, they need a mortgage, they want a mortgage, they want the right advice, how do they get in touch with you?
They can call me at 866-304-9378, or they can write to me at MortgageMinuteGuy.com.
Okay, once again, Roger Schlesinger. Again, we call him the Mortgage Minute Guy, and this is sage advice when you're looking at mortgages. This is the guy you want to talk to. Roger, thanks so much.
Thank you, Don.